And the general chat will probably start in like maybe 1 or 2 minutes, if you don't mind.
Yeah, yeah.
If anyone has any preliminary questions, happy to answer it.
Yeah, LTAF will be recorded. Yeah.
How's your weekend so far,
Oh, good.
Rafael?
Oh, good. Yeah. And you, brother? I just be home. Not crazy. Just relax. Watching
Awesome,
TV.
awesome.
Watching the UFC yesterday night. Just that.
Those guys are crazy, man.
Yeah. I mean, the Brazilian guy fought yesterday, and he got the belt again. Got back the belt. So I was watching the
That's
Shama guy.
awesome.
Yeah.
Supporting the hometown.
Yeah.
You got everything handled and situated with the apartment, or still working on it?
Not yet. Not yet. I'm still working.
Yeah, I know that's a stress you want off your head, right?
a lot. A lot. Hopefully this week, now the next week, I'm gonna sign a new lease. That's it.
All right, awesome. Definitely want to come and visit, brother.
Yeah, absolutely. I need to go to Miami few days to visit you.
Yeah, the city's been pretty crazy recently.
Really.
Yeah, a lot more tourism's about to start coming because now it's like the winter, so all like the people that don't like the snow are coming to Florida
yeah.
and trying to get some hot sun.
It's a warming time for the whole year. Yeah. Here it's still warm, but I would say next couple weeks, 2 weeks more, start getting cold, and then October is still okay. November start getting cold. December, it's crazy. Snow and shit. So.
Yeah, I hate the snow. That's why I'm in Miami.
Yeah.
I can't stand the snow. I hate being cold. I don't know how else to say that. I despise being cold.
Yeah. Miami is a nice weather. It's like Brazil. It's hot almost every year.
Yeah. I mean, if it gets below, like, was it 65 or, like, 60, it'll probably be for, like, 3 days. And then, like, I'm already in a hoodie and sweatpants and that.
Yeah.
All right. It looks like we got some more people have hopped in. I'm going to go ahead and mute. I'm going to be learning just as much as everyone else that's here.
All
if you guys have any questions, save it until the end of the stream, because obviously what you're about to see is Rafael just go through his traditional motion and what he does for his weekly analysis. So you guys can basically just take notes, and then if you have any other questions towards the end, then that's when we'll probably be able to answer all of them. So I appreciate everyone being here. And, I'll pass it over to you, Rafael. I appreciate you.
All right. So let's start, guys. Usually, how I do my my pre-week analysis, I like to use as my high time frame chart. I use the weekly time frame. So I like to see where was the previous swing high, and if the price already reached 4.5 deviation, or in this case we have the previous swing high, but we failed to close below 2.5. So here could be a reversal point of this swing high, and now price making this new swing low, and now is this deviation I'm looking for the price fill. So right now we have this candle that makes the swing low, and I measure this candle from low to the high and looking for deviations of it. So what I can see here, at this candle we already closed above -1 standard deviation, so that confirms that this is not a manipulation leg to keep moving lower. So after this candle here, I know that price is gonna move towards 2.33 and 2.5 deviation, and if you close above this level, we're gonna move it towards 4 and 4.5. So because this is a weekly time frame, it takes time, because this swing low was on April 7, so I would say like 6 months ago, but price is doing the move that it has to do. So depending on the level the price is, I expect price to make some kind of a retrace or keep moving higher. Like for example, many times when price touch the 1.5 deviation, we can expect some kind of a small retrace or even a bigger one. In this case, we touch this level, make a small retrace. It doesn't look small, but because it's the weekly time frame, this is a 1,038 points retrace. But after that, we keep moving higher, and now I'm expecting price moving towards 2 and 2.33 is standard deviation. So overall, I look initially for this chart, and now I have the confirmation that we're still in a bullish move. The second chart that I pay attention is a 7-hour chart. So I do the same logic. So I have this swing low, price trade to 44.5 here, make a new swing high. On this swing high, we price trade to 4.5 again here. Now this is a new swing low, and I have this low to the high. I can see the price trade to 1.5 deviation. Remember, I just said many times this could be a retracement point. Price retracement, if we use the Fibonacci retrace from this low to this high, I can see the price will make a retracement between 0.705, 0.786, and now continue the movement towards 2.33 2.5 deviation, because I know that we have close above -1, so we can see price moving towards to this level. So this move here, that was the move that happened last week. So now what I can see here, price trade to between 2 and 2.33 is standard deviation. That can be another retracement zone. So now what I'm expecting, I measured this candle low and this high, so this new dealing range, because we have a fractal consolidation here. So for me, that's the beginning of a dealing range, and that this candle was the candle that broke the previous high. So I measure from this candle low to the high, and I'm looking for the price make some retracement through these levels. What I can see here, that Friday on the non-fine payroll, price retracing to 50% of this dealing range, failed to close below. So what I'm expecting for this week, either if the price keep moving lower, I'll pay attention a retracement around 0.705, 0.786, or if price fail to close below the half deviation of this dealing range, I expect price moving higher towards 2.33, 2.5 deviation. And if it close above this level, price will moving towards 4 and 4.5 deviation. So right now, looking for the weekly time frame. We have a bullish week, and we didn't get to 2 deviation yet. So I'll pay attention for, like I said, if after the opening we make a even manipulation lower, I will pay attention to 0.705, 0.786, because if we gonna have a bullish week, we most likely to have a probably Monday or Tuesday prices to the downside, lower price, and later from Tuesday, Wednesday towards to the end of week, higher price. For example, if I look to the weekly range, since from the opening, what I have here, a moving to the upside, and then a manipulation lower below the opening price. So that was the manipulation to the downside, and then a moving higher. And now we got some level here and make a retracement to the weekly close. So I look at the weekly time frame, the 7-hour chart, and now I'm going to I'm looking for the community of trades and the open interest to see what are the fundamentals to what most likely to happen for the week or for the next couple weeks. So here I can see that on the commitment of trader graphic, price is in this red zone. Let me try to zoom in this a little bit. In the red zone, but we're really close to the 50% of this level. So what does that mean? That means that we have like more sell counters than the long counters. So we are in this red zone, but it's pretty close to the equilibrium of this graphic. And if you pay attention to the open interest, we can see that I always compare the current week number to the previous week. So on the previous week, we have this number. This number just changed because hold on, let me see. Yeah, this number just changed. Last week this was 0. Let me double check here. So last week this number was minus 0.56 and now it's minus 0.2. So this number is increasing. What does that mean? That we have now last week we have like 0.56 times less contracts open in the Nasdaq calculated over the average. So let's say here we can see that. Let me use the repage to show the last week. And put on last Sunday, sorry. Let me. All right, like I said, last week this number was, let me put this on a bigger screen. Oh, not this one. Last week we have 0.56. What does that mean? That means that on average we have 326,000 contracts open in Nasdaq on average, but last week we just have 270,004. So we have less contracts open, so less money inside the Nasdaq. So that's the reason when this happened, we can expect like lower prices, and then that was what we have like this movie here. We have like 3 bearish days, and now that we have this number decreasing, so today we have 0.20. So on average we should have like 281,000 contracts, and now we have 270,000 contracts contracts opening in the Nasdaq. So that shows that we most likely see the price increasing because there's more money getting inside the stocks. So if it's like the what can I say, supply demand. If you have more money getting, so we have like you most likely see higher price, and when you have less money inside the market, we most likely see the lower prices. So that's the reason I'm expecting like probably the price start moving higher for the next couple days or the next week. And finally, the last chart that I look for the weekly analysis, I look for the seasonality of the assets. So for example, here on Nasdaq, I can see that based on the last 5 years, the last 10 years, the last 15 years on the all-time seasonal, usually the first day of the the week of the October. So usually the October 6th, we most likely to see in this case. Let me zoom in this one, and then we can see better. So from Friday, October 3rd, 3 to Monday, October 6th, usually we most like to see higher price on the using the data for the last 5 years, the last 10 years, the last 15 years, and the all-time season. So we most likely to see higher price on the Monday. And then, of course, this is not a exact number, but we can pay attention. For example, if this week we should like to see higher price or lower price. So usually from Monday to Friday, that will be here. We most like to see higher price on the last 5 years data, last 10 years, last 15 years, and all-time seasonal. So we can see that this line from Monday to Friday moving higher. So we most like to see higher prices, and that's if you guys go to my channel in the score, we can see that I put some analysis that explain what I just tell here, and then that for example I just put that there that I'm expecting higher price this week on Nasdaq, because based on this 4 charts, for me we most like to see higher prices. Yeah, do you guys have any questions so far? Yeah, like Joyce was saying, I have like the weekly time frame, like the long-term view for the price, and for the 7-hour chart, I mean, still like a higher time frame, but things happen a little bit faster there. So we most like to see usually price reach one level to another in 3 days or in a week or something like that. And if you guys ask me for which indicators I have on this chart, so on the seasonality, I have the seasonality indicator, so we can get on the Elite Pro collection. On the commitment of trade, I have the interest rate, so the IRD. I guess this is a free tool. The commitment of traders indicator, that's a free tool as well, and the open interest indicator as a free tool as well. On this chart, I just have like a free tools, and on the 7-hour chart, I have the fractal consolidation here, and here I have the higher time frame power of 3. So I have here the last 4 candles of the weekly, so I can see the dealing range of this price based on the weekly time frame. So here I have the weekly, and on the high time frame I have the monthly and the quarterly dealing range. So I have like, I can see like, for example, if price is in premium or in discount, just looking for this, I can see like for now price is above the monthly dealing range high and the quarterly dealing range high. So we are in a deep premium here, but like I said, we most like to see maybe price go a little bit higher, maybe touch around 2, and from here maybe we have like a bigger retrace, probably into the upper quadrant or the 50% of the monthly dealing range, and then we keep moving higher.
I got a quick question for you, Rafael.
Yeah.
Can you go over how you did the manipulation measurement for the 2.3 for the 2025 like manipulation for the April low?
Yeah.
Can you go over that specific drawing?
Yeah.
So I know that there's going to be some people that have questions on it, and
yeah. So here we could see that price will make a new swing high here, and then that was a swing high on December 16th, so last year, and then we start this bearish move on the Nasdaq, and now, for example, these numbers show something different because we are in a new contract. So I need to turn off the adjustment for the contract. So then I can see the most accurate for moving for that time. And here, what I can see here is I have this swing high, and remember I said if you're not close below 2.5 deviation, that will be a reversal. And looking for this, maybe you guys can think and say, oh, but we close below 2.5 deviation. If you pay attention, no, we didn't. This candle that makes the low never close below 2.5 deviation. And this candle, it opened below 2.5 but closed above, so we never close below 2.5. So this is a reversal for me. And now because of that, I start measuring from this candle that makes the swing low. And right now, because we just moving to a new contract, I guess like last week, I turn on the B-ADJ, and then I just adjust this measure here. So that was the low on the April 7 price to make this swing low. And if you pay attention to the previous price, because you might think, oh, but it looks like it looks like too much the price moving here. We're talking about, oh, if your price get now to here, we talk about 10,000 points. Yeah, and if we pay attention on the previous price action, we can see the price always respect this candle. So a new swing high, measure high and low. In this case, we trade a little bit below the 4.5 deviation, make a new swing low, and then we pay attention to 4.5 here. That was when price touched 4.5, make a small retracement. So we could measure this candle here. And here I can see that we fail again. In this case, close above 2.5 deviation. That's a reversal. And I measure this guy here. Again, we fail to close below 2.5 deviation. So I have this new swing low. And if I measure this low to the high, and now we touch 4.5 deviation, I have a new swing high. Here, we never close below, sorry, this one should be this one here. We trade to 50% of 3.5 and 4. 50%, look, the bodies never close below 50%, end of the delivery. And now I will measure this here. Again, 50% of 3.5 and 4. And now the new swing high. So if you do this, all the previous price action, we're gonna get, like, for me, I just have on my charts and looking for now, the last swing high never close below this level, so I have this new swing low, and I'm looking for these deviations up here. Yeah, giving a nice roadmap. And I mean, if someone is a swing trader, that's the goal. Because let's say if you trust, for example, on that, I can see that if you're a swing trader, we most likely to see price moving from here to here. That's 3,000 points. And then if you take it this short, that was a move of 5,600 points, never close below. And now that's the nice stuff. And we most likely to see by the end of year, before December, price around here. And here we're talking about a move of 15,000 points. Okay, initially we need to see it closing above 2.5, but here we most likely to see at least 10,000 points on this move. Yeah, yeah. Let's talk about this real quick. Like what Josh was explaining. Uh, I have two ways to measure a swing high or low. So when you have a doji candle, what is a doji candle? A doji candle usually is a candle that we have like the top wick and the bottom wick. Probably we must have almost the same size. So in this case, this has a big wick. I mean, it's not like a common doji, but we can talk this is a doji because the bottom wick and the top wick almost have the same size. But to be easy to watch, this is a doji candle. So this candle here, we can see that we have a body, a top wick, and the bottom wick almost the same size. So when we have a doji candle on a swing high and low, I just measure the single candle high and low. When I have a different candle, for example, a rejection block, or for example here, a rejection block, we can measure this one. The safety measure will be just the rejection block, and the corrective measure will be the candle to the candle low to the next opposite color candle. So in this case, it would be something like this. So if you think about there's these two ways to do the measure. And this candle, I mean, it's not like the best doji, but if you think about the top wick and the bottom wick, you probably almost the same size. So look, the bottom wick, we're talking about 633 points. The top wick, 570 points. So we talk about 60-point difference. So it's not like the same, but pretty similar. So that's the reason I just measured the single candle. I now measure the candle low to the next opposite color candle high. But in this case, even if you do this kind of measure, you will have like pretty similar levels, because if you do that, that will be these deviations here. And look, 4.5 deviation would be 50% of the 4.5 deviation here. And then look, the -1 deviation, pretty similar level. The 2.33 and 2.5, pretty similar level too. So in this case, both measures would work for to look at what price is most likely to do in the next couple of weeks or the next month, whatever. It doesn't matter the size of the wick time. For example, let me give you an example on the lower time frame that probably be easier to find different kinds of candles, different types of candles. So for example, let me turn off this for a second, and even this one. All right. If you think that was a real swing low, this candle here, so here I can see that this candle was a big candle that makes the swing low, like was the 1:55 p.m. candle of last Friday. So if you pay attention here, this low was 24,923.25, and this low 923.75. So this candle makes this swing low. So here I'll measure initially just this candle, and I'll pay attention to the deviation of this level here. So here what I can see, that's the 1 minute measure, just the single candle, price trade to close above -1, so confirm that's not a manipulation leg. Remember I said at the beginning, usually 1.5 would be a retracement level. Retracement usually be the to 0 and -1 zone. There you go. That's your 0 and -1. And also, if you pay attention to Fibonacci retracement, that should be a retracement around 0.786, I guess, or 0.705. Not yet, to 0.618. And actually the low is this one here. Yeah, this low and then we didn't get to 618, so that's the reason I think we're gonna trade a little bit lower before moving higher, because we just make a rebalance to, we are in premium here, we get back to discount below 50% of the dealing range, and we most like to see maybe price trade to this level here, 0.705, 0.76, and from here we're gonna move in towards to 2.33 and 2.5 deviation. But this was a very big candle, right? So let me give you an example for, imagine that this swing low was this candle here. Imagine that was the swing low. So here, there's a doji candle. I have two ways to measure. The safe measure is just the doji candle. That's your safe measure. That's most likely to show you the move of the price will reach the high real fast. But the correct measure would be the low to the next opposite color candle high. In this case, it was the next candle. But imagine that this was another bearish candle, and just the 30 or the 4th candle was a bullish. You would move it to until the next bullish candle. So, for example, imagine that this was a bearish candle. This one too. This was the bullish. You would do this. But since it is just the very next candle is the bullish, we do that. And remember I said the correct measure, low, next opposite color candle high. That's your 4 and 4.5 deviation. 50% of, we need to see at least 50% of this level to be the delivery done. So from this swing low, the price was done here. And now if you wanna looking for scalps, or for example, since we know that that's the candle that we make the measure, and when it touch 1.5, that's a retracement level, how far price can move in lower? This candle makes this swing high to the low, and that's your delivery on the downside, 4.5 deviation, and here this delivery was done, and we make a bigger and higher retrace. So this candle makes the low. I measure this guy here is a rejection block. So in this case, it could be the single candle or until the next opposite color candle. So in this candle is the 30 candle here. So that would be this one, right? And here I can see that we never close above 2 deviation. That's a reversal. And if I just measure, like I said, the single candle, that would be a move to 2.33, never close above. That's could be a bigger retrace or the reversal, and then was a reversal because price took it this low. But so that was a reversal and price took this low. But I'm just looking to these measures to show what price is most likely to do, because these are the correct measure for this price section. Because when you have a correct swing high or low, I mean a true swing high or low, before price taking this low, or in this case, or for example, price touch 2.33 and 2.5 fail, that could be a reversal. And if you close above this level, if price trade at least to 3.5, 50% of 3.5 and 4, everything that happened here is just a smoke screen, because the price is going to move back, is going to move here. Right now, I don't have the confirmation to go to this level yet, but I know that price is going to move into this zone here sooner or later, because I have a correct swing low. We close above -1, so confirms that's not a manipulation to moving lower. 1.5 retracement zone, usually retrace between 0 and -1, and then from here we most like to see price moving from here to here. So when I have this, I don't measure the swing highs and lows, because for me, I'm looking for, if I'm not in this trade, I'll be waiting for, like I said, I'll be waiting for the price touch one of these two levels, and I can maybe set an alert. And from here, I take a long, and I will close or take a partials here. And if closing above this level, I know the price is going to trade to this level here, and then you can hold the trade a little longer. Usually, you measure the full candle week to week. You not measure just the body or just the week. Sometimes, for example, on a higher time frame, and depends on the size of candle. So let's say, imagine, for some reason, I mean, the candle that makes this low was something like this. Imagine this was the body of the candle. And we have a week like this.
Hey, Rafael, is there any chance we could also go through Bitcoin? I know there's a couple of people that have been watching it, and we did hit like new all-time highs. I'm pretty sure, if I'm not mistaken, we hit your 126 target.
Let me get here on my, hold on. I guess it was on my, I guess was this chart, or no, let me see what, that was, hold on, let me just confirm which chart it was. Let's see. That was Bybit. Yeah, hold on. Let me get here. No. BTC was this? No, it wasn't future. It was a spot. Bybit.
Yeah, I think it was a spot on US dollar for Coinbase, I think, from what you were looking at previously.
Yeah, it was the Bybit. I just opened that screenshot, so it was BTC USD, but on Bybit. Yeah, it was this one. Spot. Yeah, look here. And take off this one. So we have the swing low on the Bitcoin. I measured this swing low on the weekly time frame. So this candle, we close above -1, confirms that we go at least 2.33 and 2.5. This candle, we close above 2.5, confirms the moving to the 4 and 4.5. But many times the 3 and 3.5 deviation would be a retracement. So that was the bigger retracement. Retracing to where? Between 0 and -1. That's the blue box here. We retrace them back to this zone, touch the -1, and now we're gonna make a move into 4 and 4.5 deviation, at least to 50% of the move. That was this candle here, and then we make a bigger retrace. So now we have the same way to look the price. That was the swing high. That was the rejection block. So what I'm gonna do, I would pay attention to, in this case we didn't have the next opposite color candle, but we never closed below the -1, so I would pay attention here, this move at least. And now we touch 2. This could be or a reversal, and now we make a bigger retrace, or we need to pay attention now if we're not closing above the -2, and if you're gonna make a bigger retrace, this is not the new dealing range that I would see if the price is gonna retrace back to one of these levels and then keep moving higher, because remember I said the final delivery should be at least 50% of 3.5 and 4. Few times, especially on the lower time frame, price touch this level, 50% of 3.54, and make a retracement usually to 3 and 3.5 deviation. That will be this one. And that's what price did exactly here. Touch this level, retracement between 3 and 3.5, and make one final push into usually touch 4 and 4.5 deviation. That would be here. And after this would be the end of move, and then we can pay attention to a move into the downside. But here, what I would pay attention, I will measure just the, yeah, because I know that we couldn't make a bigger move because that was the 50%. In this case, and because it's a very higher time frame, it's a weekly time frame, I don't measure the full candle, I just measure the manipulation week. So just the manipulation week of the candle that makes the high, and here I can see that we never close below 2.33, and that's a reversal zone. And in this case, I will pay attention the same. Just this manipulation week, and then here we touch 50% of 3.54. So I'll be careful. If you are already long, it's fine, but if you just enter long like in a very higher price, I'll be careful here, because this could be the end of the move. Maybe you can push a little bit more, and from here make a bigger retrace. So right now I'll be really careful to enter long position here. And if you think about, for example, the quarterly dealing range, we are above the high, and the monthly the same. We just touched the monthly dealing range high, so we are in a deep premium on the monthly and on the quarterly dealing range. So of course I wouldn't take shorts like right away. I'll wait to see if the price is gonna fail to close above 4.5 deviation here, and then I'll pay attention in a lower time frame. For example, maybe I'll take a look on the 4 hour, how will be this structure. So if you break the structure on the downside, I'll take a short. If not, I'll be holding position. For example, on the 4 hour, what I can see, we have this fractal consolidation. So few times I can measure this fractal consolidation, and we have the same level that we measure on the weekly. We trading 2.33 failed to close above, so we need to pay attention to retracement level. Now we retracing back to 0.786. Remember, that was the level that I was showing on the Nasdaq on the 1 minute. When we do some moving to a retracement level that could be 1.5, and in this case the 2.33, I'll pay attention to this one. If we not close below the 0.786, that's a good sign. If the price trading lower, the 886 is the last retracement level that I want to see price trade. We can see the week trade below this level, but if the body close below 886, that would be a reversal, and price will be taking the low. If the body fail to close below the 886, this could be the retracement to keep moving higher. So right now we need to pay attention for between today and tomorrow, because now price is below the 50% of the dealing range. This candle is a bullish candle. Okay, it started like 4, so we need to wait to see the close of this candle at 8 p.m. and see if this candle is going to take the previous high or the previous low. Right now, it doesn't look good, because look, price tried to moving higher, has a big wick on the upside, and if we drop to the 1 hour to see, yeah, we have a push, rejection to take the previous high, and now trading lower. We didn't take the previous low, but this doesn't look good, so we need to wait for a little bit more info, and I would at least shoot the close of the 4-hour candle at 8 p.m. And if the price is gonna close below this level, I would probably take a short on the Bitcoin. And if not, can be a moving to the upside. But I don't take long, especially after this move here. Before a bigger retrace, I'm not taking any long. Let me take out this one. Yeah, brother. What's up? What's up, brother? What's going to? It's been a long time. I don't see you, brother. Yeah, Tony. The problem is you, like, for example, when you trade brokers outside the U.S., for example, especially for in U.S. we have futures. Here we have a regulated market, so all the brokers must have the same price. I mean, if you go to TradeOver, AMP, to Ninja Trader, they always have the same price. But on brokers outside the U.S., yeah, you can see, like, for example, on Binance you want one price, on Bybit another price, on Coinbase another price, because they can depend on the supply demand inside the broker. You can see, like, a price a little bit higher or lower. That's the problem. For example, when you trade forex on the brokers outside US, and when you trade, for example, Bitcoin, that you can have a price different price between brokers. Yeah, I'll go to, brother. Enjoy the food, the meal. Yeah, because one thing, Tony. Sorry, I didn't see the perpetual chart is a futures contract. So yeah, you have a price a little bit different. So this is the spot contract. So that's the spot, and on the perpetual, let me take a look here on the Binance perpetual. Probably a different price because it's futures. So, for example, look, by Bits futures, that's a different price. Sorry, this is the December 25. Yeah, you have a different price because it's a futures contract. The one that I was looking is the spot. That's the reason for different price. This one. And even, for example, here on perpetual, here, for perpetual on the Bybit, look a little bit different here. We just took the high on the previous high for July, and so the high here was 125,781, and on spot, $125,885. Yeah, Jason. I put that one later. Yeah, so shows a little bit different the price. And for example, look on the perpetual 120. 125, A said 79, and on the spot 885, so $6 difference.
So I just want to touch on a couple of points here. Obviously, everyone can be aware that crypto is going to have a difference of price points, right?
Yeah.
So the biggest thing is that like the margin of, let's call it error, or the margin of difference is really something that you want to like pay attention to. If you're looking at, let's call it 10 points, 50 points, 30 points on a $100,000 asset, right? Like those things are just going to be less minuscule, right? The bigger disparities, and I saw this actually happen this week, was like on Zcash. Zcash was like at like 170, or it went to like 150 on Coinbase, and then it was like at 120 something on Binance, and
Yeah.
like that's a much larger disparity relative to the price of the coin. So when you guys are looking at the disparities between some of the different assets, just keep in mind the actual percentage difference.
And
there's always going to be volume that is on different exchanges.
and there's some
that's
people
predominantly why a person is trading futures, because everyone has the same data feed.
and there's some people that make money on me on the difference between assets. For example, they do an operation, for example, in the Coinbase, let's say Bitcoin is 120,000, well, let's say 126,000. I mean, I just make some an example. 126,000 on Coinbase, but let's say on the Binance is 126,200. So they buy here a lot of Bitcoin and sell here to make this $200 profit between brokers. So they keep buying and selling. There's an operation that I just forgot the name of what's that. So they keep doing this. So buy to one broker and sell the other to make it this $200 difference between brokers. So this can be this can happen in crypto. In forex, the same. If you, for example, look in the price for Euro USD on forex.com, could be a price, and if you go to the I don't know, I just forgot the name of the forex brokers. The Equinix could be in another price, and looks the same. Yeah, because sometimes the broker they can, like, for example, put a price a little bit higher or a little bit lower, depending on the number of contracts that clients are doing. For example, if they have a demand for like more people buying, they can raise the price a little bit, or more people selling, they can like decrease the price. But it's not like, if, for example, you gonna see like a $10,000 difference. Sometimes $50 or something, because that's a small number between brokers. Yeah, like you just say, and I say the only market that's regulated is the futures market in the US. So here, every broker must have the same pricing on every asset, because it's a regulated market, and that's the reason that most of the brokers are not allowed to have like open like. They cannot like allow you operate here, because they don't have the license, because it's not a regulated market. Like, for example, even when the Binance has the Binance US, on the Binance outside the US, you have tons of cryptos, and here we just have a few of them that was like more restricted, more regulated. And then here I know that we didn't have the leverage like you have outside the US. That on Bitcoin you can use the leverage up to 125x, and here you couldn't do this kind of stuff, because that's something that people can lose the account in seconds or minutes, and here they are more protected about it. Yeah, correct. The prop firm, they use the demo account, so there's not a regulated market, but you have a regulated market, and if you use like the real money, an example, you can use a TradeOver or Ninja Trader or AMP, but when you trade the real money, the prop firm, they use a demo account, so it's not like regulated. As far as I know, no. I guess like Forest.com is regulated here in the US. I guess Forest.com, but I'm not sure. And if for example, if you go to any broker, that any forex broker, if you live in the US, when you try to do a login or something, they say you must confirm that you're not a U.S. resident because we are not allowed to operate in the United States. So because of your IP, they know that you are inside the U.S. and you are not allowed to have an account there.
All right. Well, I believe that we've touched on a lot of points. I think we got a little sidetracked here, but for the weekly analysis, I think this has been very, very insightful. Everyone's gotten a review as well as about some of the manipulation, price swings, as well as the logic and underlying framework that you use with deviations. So that was incredible. And I'm always really appreciative of seeing that. One of my favorites is literally seeing that higher time frame, ping pong, where it's literally deviation up, deviation down. And it's just like that's how symmetrical you can see the markets become. And when that happens and they produce those type of conditions, especially even on the lower time frames, it gives the traders a lot more confidence to look at those intraday price swings, right? Like you don't need to require the top tick or the bottom tick, but the meat in the middle from after price creates either a nice failure swing or a breaker or an inverse fair value gap. Add one of those deviations, even coupled with S&T for some more confluence. It's really, it provides a lot more strength in the analysis to trust the move. And, for everybody that is wondering, Rafael does live trade and he does show his executions and he does this live, right? So this is not something that's hindsight, right? Yeah. Anybody that hasn't seen him before, that's what he does on a week-to-week basis. So, I just want everyone to understand that it takes a lot of experience to be able to call these deviations in live time, in real time.
Yeah.
But providing the framework from the previous, deviations really gives, a clear path on saying, okay, well, what am I doing next? What am I waiting for? That swing, waiting for a change of state delivery, waiting for a specific curve of the market maker model to originate. And you just start stacking confluences through your own algorithmic signatures, whether that be through indicators, price action, et cetera. But, building that entire framework is really what that experience is going to provide for you. And again, for anyone that's not aware, Rafael does do this on a week-to-week basis. So
yeah,
I definitely encourage everyone to check out what he does. There's tons of videos that he's also posted on his YouTube with live execution, so you guys can see how this framework materializes and pans out. And it's been the same thing, so nothing's changing, right? It's just refining and becoming more experienced. Obviously, everyone has losing trades and there's opportunities where you'll be able to refine, but over time when you see the repeating phenomenons, it's very hard to deny. So just want to be able to add that, and obviously as a appreciation for you coming and spending some of your time on a Sunday to help out our Discord and also provide more insights. It's really appreciated. So
anytime,
for everyone that's in the comments right now, please drop some hearts, drop some love, and just let Rafael know that you appreciate his time spending here. And again, if you guys have any other questions in the future, then you can always tag him in the Discord. He's obviously trading on his own, has his own Discord and doing his own trading, but with ample time, I'm sure that he'll get to you. So Rafael is a big believer in helping out everyone and has a huge heart. So it means a lot to me that you're up here. So I appreciate you again.
Anytime, brother. Thanks for having me again. And if you guys have any question, feel free to ask me. And then, like I said, we have some videos talking about these deviations. They're not an easy thing to understand at the beginning, but once you get more familiar with, that's a very powerful tool to take nice trades. So thanks guys for watching. Appreciate the time. Have a great end of summer. Well, the market's gonna open in a minute, so see you guys next week.
Absolutely appreciate everyone, and please be safe this week. You do have tentative news, so anything that happens with any potential government shutdown updates and such that can mess up the calendar a little bit. I know that we had delayed NFP data, so that's still looming, and we also have some FOMC stuff. I believe that's on the market news for Wednesday. So just be cautious.
Yeah.
And
yeah.
again, I really want to say this just from really the bottom of my heart to all you guys.
Yeah.
Please. This is not an invitation to just go and trade Asia, especially because you're just on a live stream right now. Like if your model is within Asia, then that's great. But don't just take insights that you're just seeing on a fresh video or a fresh live stream right now and just look to employ it in a live market condition. That's very, very important. And you guys want to be able to back test this on your own and develop your own confidence. Don't rush the process, because that's just going to set you more behind.
And something that you guys need to be careful. That's the second week of the month. Usually the week after the non-farm payroll, we have the PPI and the CPI on this week. So usually it's a very volatile week. So be careful. And like I said, sometimes if you used to trade, like you just said, if you used to trade the Asia session, it's fine. But usually it's better to wait some time to see what price it does on the Sunday night, and then on the Monday you can take a trade. Like I said, for me, we most like to see the move here. We open higher, so we most like to see now price moving towards to this level. But like I said, this is a setup that I'm familiar with, but if you guys not used to trade this stuff, now go like it, because I just said this, and you're gonna start taking longs here towards to this level. So be careful and wait for the better time. All right, guys, that's it.
Absolutely. I appreciate everything, Raphael. I really appreciate all those words too at the end. Just everyone, just please be responsible.
Yeah.
Obviously you guys know that you guys are pressing the button, and that's something that you got to just take on with your own responsibility, and that's just something we always want to remind you guys of. So just be easy, take it easy. There's definitely a full week ahead, and again, this is one of the few times that we've had a live stream that goes into market open. So I just wanted to make that extra clear and known. So thanks again for everyone that did drop some support for Raphael. If you haven't already, please do so. That does mean a lot to us, and also encourage us to do this in the future. And I'm sure that, again, if Raphael has his own time permitted on schedule, it's something that I would love to do on a weekly basis, based off of the 5 to 6 p.m. stream right before market open. And if that's something that you guys want to see, then definitely let Raphael know.
All right, guys.
All right, take it easy, everybody. Have a good one.
You too, guys. Bye-bye.